In this video, I'll share a few ways to look at moving averages and specifically moving average crosses to inform your trade decisions. I'll share trades from the crypto, equity, and Forex markets. The majority of time, I'll be covering how to use moving average crosses in ways I don't often see discussed. Now, before we jump in, this type of video is something I typically would release within my training because I'll probably cover quite a bit of things that require context outside of just moving averages. I just wanted to mention that ahead of time. Also, if you're interested in building your own edge on the markets and want to get started with the training, simply send me a direct message via my Discord group. You'll find a link to join the Discord group down below in the description. So let's jump right in and get started. Now we'll pull up a chart here. This is Bitcoin US dollar from Coinbase on the 4-hour time frame. And most of the examples here will use this chart with these two EMAs, so exponential moving averages. The first one is the 200 moving average, and the next one is the 24 moving average. Now, I'm not going to discuss why these two moving averages, other than from these trade examples or the specific style of trading that I do, these two moving averages is the information that I want from price. So if you watch the previous price video where I discuss that's really the foundation of the trade decisions that you should be making, EMAs or moving averages are an interpretation of the average price, which is given, it's in the name. But it's also another gut check to your trade decisions, and as you'll discover in this video, also provide you with additional areas of interest in price for you to make trades or trade decisions. So as we jump in here, most EMA crosses are talked about as entries or exits, and what we mean there, and let me just recap this, the 200 EMA is red and then the 24 EMA is black. So here on this time frame here, right around 13 February, there was a cross of the 24 EMA with the 200 EMA. Now, the simplistic way to look at this, which I don't feel is the best way to use moving average crosses, but that's a complete other video for another time. This would be a potential trade signal or a entry signal someone would use, and then they would enter the trade here. Now, if you did that, this is a pretty good trade. It worked out pretty well, especially as the 200 EMA is holding up as a supporting price as price is trending up, and then it's also trending up here. Pretty much from this time here, the 200, it has been trending up. That's the typical way that moving averages are used. But how about we start injecting another parameter of price interest based on a moving average cross? And what I mean by that is there's a particular cross here, right here, which is the 24 crosses below the 200. And it didn't quite do it here, but it almost reached it here. So these are interesting areas in charts. And you'll see that here as the rest of the video unfolds, but let's mark that area right here. So this price right here is $3,900, so $3,900 US dollars. And this is where looking at moving average crosses in a different way will provide an additional parameter for making trade decisions. So let's just briefly walk through what happened when price got back to this cross here. So this cross here, it traded below that. And then as it got to this price, it ranged in this area. This is really the middle of this value range here. If you look at this value range of price right here, this really is the middle of that value range. Now it went to price excess, it came back down, and then it went below that. And then what did it do as it was starting to come back up and retest this? If we use the standard support and resistance lines, it started using this price as both resistance and then support. So it was supported here, and then ultimately the 200 was used as, that's a very clear kind of bounce off the 200 EMA there. And then here, it was used as additional support, this same price level, this same cross. Using an additional parameter like this will help you further ground your trade decisions. Because let's just say that you did use a simple cross of the 24 crossing the 200 to do your trade entry. Now you're looking for destinations and targets, and the first thing that should be on your mind is something like this, is a market memory cross like this. So your first expectation, if you did enter this, is I expect some kind of price resistance, some type of reaction at this price level here, because something changed in the market here. So I expect some kind of price reaction. And if you were still in this trade, you got what you expected, a slowdown. Now it had a overextension and then a big sell-off, or rather big sell-off. But what do we notice here? Well, the first thing that we notice, and this is where being a steward of reading moving averages will make you a better trader, and I believe is one of the things that if you get really good at, it will further reduce any fear or greed or stress or emotions that you have within your trades, because it's another interpretation of price that is lagging, that is slow compared to the current ongoing market actions. And what I mean by that, and this is a good example, is that, well, the 24 crossed here, and then we got an expectation of a price reaction here. We've got a little bit of deviation from that. But then as this big sell-off happens, what's still happening? The 24 moving average price on the 4-hour time frame is still above the 200. So it's still above the 200. So this sell-off here might have had us a little concerned because the 200 was broken, but you expect that. You expect a test of key pricing areas. We see that held up, and then we get, once again, we get a resistance area at this previous price level. And then it breaks through, and then it's used as support, and then ultimately it's used as an inflection point for a move up here higher. Do you see how having this as an additional data point will give you additional confidence of whether or not strength is holding up or price strength is holding up? It's an additional way to look at the market. I find that many people, they look at just moving averages and crosses in these simple ways, and whether or not I should get in, or when it crosses here, that's a opportunity for me to get out. But there's a greater opportunity for the market memory of this. And let's move on to another example here that will illustrate this a little bit deeper. So we're going to move to the equity market, and this is a trade I just took a 70% exit on, and my entry, and so we're looking at OHI on 1 day time frame, and way back here this popped up on one of my scanners here, this move here, and a couple things happen. The other moving average that is on this chart, first up is the 200 is red, the 24 is black, and then the 50 is orange. So that is the moving averages that we see here. Now this popped up on my scanner right around here, this move here. Now if you are a breakout trader, this would have been a good breakout to trade, but I missed this trade up. So I missed this whole move up. But what was interesting to me is that the 24 and the 50 thereafter crossed the 200 moving average. So this is where having this type of information or looking at the market from this perspective, you have to be patient, because I missed this move up here. I wasn't going to trade it because I just didn't see it. I didn't get to trade it, but I still saw it as a good opportunity. So this became on my radar. And where did I target price on my radar? Where there's a blue line right here, right where these two crosses happen. Two moving average crosses showing strength. This is a point in time that if price ever gets back to and retests and holds up, this is potentially a good entry for a pullback. And you'll notice, so this price right here was right around 28.40, and my actual entry was at 29.32 on August 1st. Let me see. Yep, on August 1st. And what I was, so this was, how long was this? Let's look at the time frame I had to wait for this setup. So I had to wait 74 days basically for this setup to play out for a trade entry that ultimately, and I just took an exit April 1st here at 70% of my position when this broke down here, and for about 30%. And let's just walk through exactly why I made this decision. So first up, it was a real simple decision. This price here, to me, was an inflection point where there would be interest from other traders, from other trading styles. That's when you get back to what's happening here in the market participants. Well, these two moving averages, these three moving averages actually, and the crosses, they indicate strength, but they're also signals and signals for other indicators and everything else where other traders will be making decisions. So it was just a matter of being patient if price ever got back to here, and it never did get back to here, but it got back to within 3% of this price. So that's what I look for. I look for a 3% pullback to this price, and then I look for proof that price is holding up. And that's what we got here. It never reached this price here, which is the price target I had. And then it held up 2 days in a row. And then my entry was on this day here, August 1st. It was actually August 1st. So here, August 1st at 29.32 was my entry. And then as this trade unfolded, I was continuing to use the moving averages. And the first time that I got concerned, and these, once again, this is, I'm simplifying it. I'm not just using these type of crosses, but they help inform my trade decisions. So they're an important additional factor to inform your trade decisions. So here, when these crosses here in this range here started happening between the 50 and the 24, see, there's a cross here, cross here, cross here. Well, that's a sign of increased volatility. But look at something here. This is why I took an exit on this trade, at least at 70%, is that these crosses here, they're all at a really close price, right around 36.50. And the second that these crosses were broke, this broke down and retested the 200. Now, I don't know if the 200 is going to hold up. We're in the midst of this. That's why when this, as soon as this broke, I took an exit on this, because it was clear that this was not going to retest this high right here. Now, where is my rest of my 30% position? It's 4%. It's a trailing stop loss, 4% from the 200 EMA. So that's where my stop loss is. And by putting in a trailing stop loss at 4% below the 200 EMA, I'm giving it enough room to maybe range here a little bit and bounce off this as support. Now, what will I be looking for as well? This is, once again, an upside interesting area, and I would be watching this area given the amount of crosses here, and I want to see it to really maybe stay in this trade or maybe not move up my stop loss. I want to see it really break through this area and use it as support at some point in time in the future. So this is why using these type of price areas can be strong additional trade decisions that kind of ground the decisions that you're making, because it's based on the reactions of something changing in the market. Let's move on to another example here. We'll go to the crypto market. So let's go back to the crypto market, and we're going to go to ARKBTC, and we're just going to use these two moving averages here. So we're using once again the 200 and the 24. Oh, let's go to the last cross that we see, or let's go to the second cross that we see. So this cross right here, what's happening right now, and this is something you would have to been very patient on, because this was back in February 7th of 19, was the 24 crossing the 200, and actually crossed twice. It crossed down and crossed back up. So we go back here and say, okay, this is an interesting point in the chart. What's happening right now? Well, it never got to this price of 1,100 Satoshis, and it bounced off that, and it's currently trying to figure out whether or not it wants to find support right in this price range here. So this is another, once again, we're on the the 4-hour time frame here, another way where when you're looking at this and you're saying up here, well, is it going to retrace? Where are the potential areas of retrace? Well, here's one signal to get out. That would be a traditional cross, which is the 24 crossing the 200. But then, okay, well, where might this potentially stop? Of course, you can use support and resistance and value channels and all that. But as an additional parameter, we can say, well, the last crosses that we see here are here. There's 2 crosses here. So maybe that's an area in the chart we should watch to see if there's price support, whether or not that price is supported. And if we use something like a 2-try rule here on the 4-hour time frame, we would like to see an additional try, something where it would hold up right around here. Price would hold up in this range, and this would be a potential good risk reward ratio, which is where you would say, let's do something like this, a 7% stop loss, and then the expectation is that maybe it might retest this cross here. So this cross here, which is right around a 30% move. So pretty good risk reward ratio. So this is an example, once again, of just using these simple market memory crosses for potential price areas within your chart. Let's move on to another example. I know I'm going quick here, but I think you're starting to see it. You're starting to kind of, if you haven't looked at moving averages in this way and really haven't used them in this way, I think you're starting to see some potential, hopefully. Here's an interesting trade that I'm looking at, not right now, but I'm waiting to unfold, and that is whether or not ADA retests all these crosses here. Whether or not it pulls back far enough to retest all these crosses here, which from this point in time, let's see where we're at. It would have to cross the 200 and then go down, retrace another 26%. So how likely is that scenario? Well, the first thing that has to happen is the 200 has to be crossed in price and close below there. And then we'd also be looking at the daily time frame. And then we'd like to see probably another 24 cross. And then this type of scenario would be in play. And then we also have another kind of key inflection area here. We have a couple inflection areas, but this is the major one down here. So there's obviously a couple more factors into that. But the other thing too is that oftentimes in the crypto market, you have to deal with the increase in volatility. You have to be able to trade within that volatility and understand the market goes from bull to bear bias pretty quick. And you have to be able to recognize that. And recognizing that means the difference between taking a trade here that is a heavy trade. So maybe I do trade this because I think the 200 will hold up and there's still bullish sentiment. Well, my position size probably would be smaller than if this is, because we don't know yet if this is going to be broken. And this is trending down. The 24 EMA is trending down and the 200 is starting to level out. So if we anticipate what might be happening here, we anticipate a cross here. And if that crosses and closes solidly below that, then really the next point of interest for me in this chart is down here. That's really the way to look at it. If you just want to break down trading into simplistic terms, and typically that's what you want to do, I'll have another video here in the near future on how I trade multiple markets. And I trade multiple markets by really looking at each market individually, but simplifying how I look at them when I'm looking at an individual market. I just simplify my thinking on them using my trading style, my technical analysis. And that's what I teach in my training as well, which is how to the foundation of all this thinking so that you can build your own trade system. Let's move on to the Forex market. So we'll go to the Euro USD, and this is a trade that I recently did on the Euro USD, and I am still in this trade, which in the midst of recording this video, I probably should check up on it. But let's go to the 1 hour time frame. I did this on the 1 hour time frame using more or less this method of trading, which here back in, let's say right here, with this cross here on 8 April. Okay, so that cross there, you notice here it was used as kind of an additional point of resistance. Now, I've mentioned this before in my Discord group. I have a 5 try rule, and this 5 try rule actually held up here. Let me zoom in a little bit here. And I'll explain this in another video too in the training, but here's 1 try, here's 2 try, here's 3 tries, here's 4 tries, 5th try, overextension, failure, awesome short opportunity for a scalp. And I probably did scalp that, I don't remember. But this is a perfect setup that I look for a lot of times. And from here though, we see from this move down, the 6th try breaks through. So you'll see this a lot, especially in the Forex market. And then this breakthrough has a cross on the 24. Well, I missed that move, but this is an interesting area in the chart for me. So I highlight this area in the chart, and what did price do? And it's probably best for me to drop down to a lower time frame because I used the 1 hour entry or the 1 hour time frame to spot this potential, and then I entered on, well, I actually entered on the 1 minute time frame because I know, and let's go to the 5 minute for instance. I know many traders will say, and I do agree, when you're first getting started, don't try to time tops or bottoms, but I like to time bottoms and tops, especially in a price, in a kind of move like this where I'm expecting some kind of support on price action. So my first probe position was right down here. And then as the trade worked in my favor, the next thing I was looking for is, does this price area cross hold up? And the second that it held up on the 5 minute time frame right here, I went in with my typical position size. And since I was pretty much right away in this trade, when it got above the 24 here, I put my stop loss at break even, and just I'm sitting on the position. And because what I'm expecting here based on price action here is I'm expecting another try. Let's go here. It might break down here, and I think I'm up probably about 50 pips. What does that move? Let's see. So currently up about 56 pips, and I'm being patient with it because I'm looking for, and it might break down here, but I'm looking for, what do we see here? 1 try, 2 tries. I wouldn't count that. 3 tries. I'd like to see a 4th try, and then I probably will exit there, which is right around 78 pips. So I could even take a little bit off right now, but it's hard to say. This looks like a fake move, this looks like a perfect way to trap traders right now in a short opportunity. It might come down to retest the 200, so I'm not sure, but I'll look at this after I finish the video here, and when I do my trade checkups here at the end of my trading day today. So if we go back, I missed this move up. A lot of people would have been chasing this trade and getting in something like this on a pullback, which is actually a pretty good scalp. But I look for a better entry criteria than that. My theory of the Forex market and how I see it unfold, there's other levels here as well, but is that this price is going to be tested again, and it was tested again, and that's the best opportunity, especially if it falls within my trading time frame, which it did. So I was up and awake during this move. So, and I don't usually trade the Euro USD just because it's one of the most manipulated pairs out there, unless I see setups that I like. And this is a prime example of, there's a couple other things that went into this trade beyond just the 24, but that was one of the bigger factors of me looking at this price area in the chart for a potential. I originally thought it was just going to be a scalp, but it turned into more of a swing trade as the trade unfolded. So as it continued to unfold, I was watching 24 was staying above the 200 here, and it was behaving as if it still had some upside strength. Let's jump to another Forex example. So the Aussie against the New Zealand dollar. And this is a trade where if we go here, I already have it somewhat marked up. So what do we see here? Well, we see a couple things. We see here's the 24, and look at how many crosses we see in this range that I've highlighted here. Now, here's what drew my attention to this and why I took this trade, is that this huge move here, no idea why it happened, maybe some news, who knows. But remember in the pricing video I said, oftentimes you're looking at a chart what didn't happen, and you're looking at it backwards. Well, this is an example of looking at it and say, why did it stop here? It's a weird place for it to stop, I thought, just right here at this price. And then the next thing I was looking for, so I missed this big move. And the next one, I'm actually in this trade two ways. My algorithmic trading that I'm still modifying had me already in this trade from 1 or 2 weeks ago. So I was already in this trade. But this was a move that popped up on a scanner. And I looked at it and I said, okay, well, I missed this move. I'm not going to chase it. But what I will do is, because this area of interest of crosses, it's an interesting price area. If this holds up, then this is probably an opportunity to go long. And then where's my upward target? Well, you already guessed, here's another area of crosses right here. Another area of crosses that is an area that we would like to see price to move through, and resistance. And what happened right there? So let's see. I entered somewhere around here. I don't know where, but somewhere in this chop here I entered in this range. And then my anticipation was that when it hits this price level, which is these crosses, we're going to see some resistance. And what do we see on just the 1 hour time frame? Well, we see some resistance and slowdown right there a couple times. So if we go here and I grab my arrow, here's the first almost test, almost test, almost test. And then here we see just slowing down. And then here it comes back still within this kind of box value range here. And then it breaks on through it. So what's happening right now? Well, it's continued to go up. It's continued to show strength. So I'm still in this trade. But this is another example of, instead of chasing this move here, when you see big moves like this here, instead of chasing it, go back and say what didn't happen. It didn't move beyond here. And then when it retraces back, it didn't fall below kind of these levels here. So then look for clues of like additional price levels that you can make trade decisions on. I'm kind of talking around the point here, because if this was the only decision point that I made on these trades, then I would talk more confidently about just using these. But these are additional factors. With trading, you're not just making trade decisions typically on one little indication of the market. You're combining a combination of things. That's what makes up your edge, is a combination of things. So this is one of the things that makes up my edge in the market, is seeing these, I won't say imbalances, but seeing these interesting areas of price and then interpreting them right as far as strength or weakness to then enter the trade. So let's jump to, I think, 2 more examples. Let's go back to the equity market. Here's a trade that I'm currently in. And let's go back all the way in time on Western Digital Corp, WDC, 1-day time frame, and all the way back in October 2016. What happened during that time? Well, we see a cross of the 24 and the 50 right here. So we see the cross of the 24 and 50 right there. Interesting area of the chart. So this is it's 2019 when I'm recording this video. So that's 3 years ago. So I had to wait 3 years, and I haven't been watching this for 3 years. It's just this factored into my trade decision. I entered at 45.10. So I entered and on anticipation that what will unfold is unfolding right now, and that this area will hold up. That's what I entered on an anticipation of at 45.10. And basically, as we saw kind of the 24 cross the 50 here, so it's showing strength. Everything's trending up. The 200 EMA is starting to level out. So we might see a level of range before Maybe we see a couple large moves is what I anticipate here. And it could be in the next couple weeks. It could be in the next day. But what am I watching for right now? So I'm already in my position. I might add to this position if this area holds up. So if this price area here holds up, especially now that it crossed the 200 EMA, if it continues to show strength, I might add to my position, especially as this area holds up. But that's a big market memory there when you look at this here, all the way back to October 2016. So this is, once again, it's another kind of line in the sand, my trade, that if this breaks down and it breaks down to 47 and it routinely closes down here, let's say that this trade, as we game this trade where I'm currently at, let's say it breaks down here and it just breaks through here and it never really does close within this range. It never closed solidly in this range. It doesn't do any range trading within this range, and it closes down here. It's probably a sign that there's weakness here. There's still uncertainty, and maybe I do want to consider this isn't a trade that I want to put my capital at play in, because there's better trades out there, just because it's not holding up on a key area of price that it really should show strength and break through and use as support. So let's end on the crypto trade. Let's just do Theta BTC. I think someone in the Discord group mentioned this today. And what I said really is that at this point in time, I mean, it could remain bullish. One thing that, if we look at the daily time frame here, well, the interesting cross, there's not a lot of data here, but the interesting cross here is way back here. And usually on this, I just kind of see the pattern, which is if there's a down day, this could, obviously this is where in the crypto market, you have to, when it turns bullish and every pullback is being bought, you have to sometimes move quick, but you don't want to move too early. But what I noticed on this is that typically there's at least a follow-through day on a down day. So we see that here and here, not quite here, but it did follow through a little bit here and here. And then I anticipate there'll be a follow-through. So really it's best here probably to remain patient and wait for maybe a little bit of pullback here. But if you go to a lower time frame on this, on the 4 hour, this is where, if we look at, here's the last crossing area, which is where I marked it here. So this is where I marked it on the daily time frame. Well, I guess what you could do, potentially, if there is strength here, is that if you think that this is going to hold up, a good trade could potentially be right here. You're looking for it to hold above the 200, and then you're looking for something, one of your points of interest in this trade, among other things, would be probably here, this cross right here. And that just happens to align pretty much perfectly with this whole, what would be traditional resistance area. So this is another clue that, okay, this probably is an important area and where you maybe want to look at your first target. And obviously your first targets would be somewhere in this range, but this might be your first target if strength comes to this and there's a continued bullish move on this right here. So this is just, once again, I think I've provided plenty of examples, real simple examples of how this just plays a simplistic role in giving you price areas to identify where you would expect some type of, usually if it's on a move up, you're expecting a stopping price action there. And then you want to see it move with strength through that. So it might stop here, move around a little bit, and then you want to see it move solidly through that, and then come back and use that area as support to remain in that trade. And then obviously you're watching the relation or what's happening with moving averages. The other thing that you can do, and this is a given, and is that obviously you can throw on another EMA. So you can throw on maybe a faster EMA, so like a 9, and let's just make that bigger so you can see it. So you could throw on a 9, and then this will give you a little bit of a faster view. The one thing about this is that with a 9, you see it's tracking the closes. You should train kind of your mind to read these candlestick charts, but also kind of read the middle of these ranges. So you'll see that the 9 is on the 4-hour time frame here. It's using, or it's a lot of times right in the middle of the ranges. So obviously there's volatility moves down, but it's in the middle of these kind of ranges here of the price action. Well, you should be in a way looking at the average price anyways. On candlesticks, it's another way to reduce the noise. So there's a lot of noise in candlesticks. There's just, but if you go back to the price video that I recently released, it's all about price. Well, the 9 gives you kind of an average price. Now, if you change this to different candlesticks, you'll see that it smooths out the moves as well. And you can kind of see more of the trend of as things kind of go through their waves. There's a wave up, a wave up, a wave up. But when you move back to traditional candlesticks, there's a lot more noise. Now, reading the 9 will give you the kind of benefit of this type of candlestick method without having those candlesticks on your chart, is a good example to say it, at least on the 4-hour time frame, I find. So it's another kind of way you can use moving averages, and you can use these crosses the same way. You can do the same type of thing that we've been discussing in this video, and this is where you experiment on kind of take this concept and experiment based on your trading system. But you can use this and say, well, there's a lot of 9 crossing the 24 here, so maybe I go long if this price right here at 2,300 satoshis continues to hold up, which happens to be right in the middle of this value range. So if you draw a value channel here, it just happens to be right at the middle of that value range. So really it's using a lot of what I teach anyways, which is if this 50% value range holds up, it's in the middle of kind of these crosses. If that holds up in price, it's maybe a signal to go long. So that about wraps it up. Hopefully it was clear in a lot of the examples I provided. I tried to really mix it up and take from different markets. Once again, if you're not a member of the Discord group, you'll find a link down below. And if you're not subscribed on YouTube, definitely hit subscribe. I look forward to seeing you in the next video.